I'm Mark Lavelle from Countrywide Wealth here. Thanks for joining us for this another part of our education series. Tonight we've got our special guest, Andrew Collins from Pepper Money, one of our specialist lenders.
How are you, mate?
Thanks for joining us, mate. Very good. So today we're going to focus on self-employed lending.
Yep.
Perfect. A lot of misconception and myths and what people think. They think it's harder than it possibly is getting a loan as being self-employed. So first of all, we'll start off. Way of introduction, myself and Andrew in former lives were both business bankers in the commercial space. So we've done a fair bit of all this, what we're going to discuss tonight. All our clients were self-employed. You've now moved into your specialist role, mate. So thanks for coming in. So,
no worries.
All right, so first to kick things off, can you define what self-employed actually means to a lender?
Self-employed is where a customer is working for themselves under a range of different structures. You've got a company structure. You can do that through trusts. You've got sole traders. You've got partnerships. You've got companies with family trusts attached to it. So there's a range of different structures that people set up depending on their circumstances and the advice from their accountant.
Depending on what the accountant suggests as well.
Correct.
Because a lot of accountants can structure it based on their income and tax and everything else.
Correct.
So, understandable. Not a problem. Okay, so the key takeaway there is that the bank's looking at what's behind the business, not just looking at the payslip.
Yeah, that's right.
Yeah,
that's right. And how the business is structured, how it earns its money, and how it retains its money, and where its expenses go.
Yeah, and sometimes people don't have financials, so we'll get into that a bit later.
Absolutely.
Okay. Yeah. So, second question: what are the biggest challenges self-employed people face that you see?
So a lot of the time, new self-employed people. They've been in a PAYG role for years and years and years and decide, okay, well, I can do this for myself. And they become a new ABN holder.
Sole trader, for example.
Yeah, sole trader or partnership, or they move straight into a company structure. The banks look at that and go, oh, you've only been self-employed for 3 months or 6 months. Well, you need to see financials.
And that creates an issue, right?
Yeah.
Why do you think that is?
Well, there's no performance there. It's a performance thing based on the history. And that's what banks aren't forward-looking, they're rearward-looking.
They
look at historical
financials
numbers.
In the rear view mirror.
They want to know that you can do this job and you can do it well. And that's where your financials prove that. When they have that historical data.
And I suppose the stats across the board say that a lot of small businesses may fail in the first 2 years. So a lot of major banks where I used to work, probably where you used to work, we're looking at minimum 2 years self-employed figures for applicants like this.
Yeah, that's right. So, and depending on the industry that they're in, sometimes they look at 3 and 4 years.
Okay. So what about tax minimisation, things like that?
Look, from a personal perspective, if you want to save tax, that's great. From a bank perspective, the less money you earn, the less money you can borrow.
It's going to be harder to get a loan, right?
Correct.
Exactly.
Hard to prove where your money's coming from. There's a lot of different strategies that accountants use, all legal and all above board. No issues with it. But there's it's always that hard thing of, do you want to pay tax or do you want to get borrow money? Like it's
the amount of times I said that in my previous role, a lot. Okay. So they're the challenges. So one thing we see every day is 2 lenders can assess things totally differently.
Absolutely.
From a major bank to someone like a specialist lender where you're from. So it's not a case of kicking the bin over and saying, I can't get a loan. You speak to a broker and we can refer on to a specialist lender for advice.
Well, there's a lot of specialist lenders. They look at different things.
They do.
They might look at 2 years financials. They might look at 1 year's financials in isolation. They might look at using BAS statements. They might use business banking statements. So there's a range of different things that the non-specialists, the specialist lenders, non-banks could look at to be able to help the self-employed people out.
So going on from that, what solutions can a broker offer these sort of people? Okay, so probably just covered that.
Also, I think with brokers, they've got access to lenders. That your average everyday person knows. We've got the big major banks. They've got some of the smaller banks, but they don't know about all these different other bespoke lenders that you've got that you can use to be able to secure funding for a client.
It's our job to educate them.
And that's what a broker is for. That's why you come to a broker, and that's why you use a broker, because it takes the legwork of the customer who is trying to do their business and gives it to the broker. The broker then finds you a few different solutions and discusses with you how you can best make it work.
Exactly. All right. So based on a short-term ABN, what's the minimum again? that you look at in particular?
Some specialists are doing 3 months ABN.
Okay.
Others are doing 6 months.
Yep.
A lot of them prefer 12 months, depending on. There's normally 2 criteria. It's ABN registration and GST registration if you're above the threshold.
Yep.
So if it's 6 months ABN, it'll be 6 months GST.
Yep.
Sometimes it's 12 months ABN and 6 months GST. 2 years ABN, 12 months GST. Depending on where you are in that cycle, will depend on what sort of product and what sort of rate you're going to pay.
Okay. So without getting into nitty gritty, a short-term self-employed person who's looking at an accountant's declaration, they need to be registered for GST if their accountant's going to be declaring the income that they are declaring, basically.
That's right.
If it's over the threshold, they're not registered for GST.
Yeah.
It's not going to work.
There's going to be questions
from a compliance
asked.
perspective.
That's right.
Yeah,
that's right.
Exactly.
And a lot of the specialist lenders need the person to have an accountant for at least 12 months.
That's right.
Okay, but
Can't
there
just
are
get Joe Blow to sign off on something.
correct. They need to know your business and how you're going.
It all makes sense.
There are other options for 6-month terms as well.
Okay, excellent. So without naming specifics, specific clients, have you got any examples of a situation where a self-employed borrower couldn't be helped by a major bank and came to a non-conforming lender and was able to be assisted and get the property?
Yeah, absolutely. Some of the ones I've seen have, because banks want 2 years financials.
Yeah.
The second, they've been in business for 3 years. The second year was okay. The third year was really good. So what the banks do is they average those 2 figures.
They do.
Which is just a standard thing. So they might have earned 100 grand net profit this one and 200 grand net profit this one.
Yep.
So they get 150 grand net profit. That really sort of limits their borrowing power because their business is going like this rather than straight lining it.
Yeah.
They've gone to a specialist lender. Specialist lenders looked at it and gone, okay, well, let's use 1 year in isolation.
Yep.
So let's use a net profit of 200,000.
Yeah.
And that's what they've lent. That's what they've lent on.
So if they're looking at trends and variances, this sort of stuff all makes sense in the background. Yeah. So not as complex as you might think.
No. No.
And that's why these lenders come up with solutions, because the banks say no, there are options. You might pay a slight margin in interest rate that's slightly higher because they're playing in a different space, different risk appetite for the borrowing they're doing.
Correct.
So and that can be all explained in further detail when you speak to me as the broker. So. All right, not a problem. Excellent, mate.
And what just sorry to jump in there. What I like to explain with the specialist lenders is it's not a 30-year term with that specialist lender.
Yeah.
So it could be a little bit of short-term pain for a long-term gain.
Yep.
Get you in your house now. You get that piece of equipment now to then build your business. In 2 or 3 years' time, when you've got the track record, you can then go back to a bank.
Opportunity cost, right? So you can get in early and then look
right.
you may revert back to a standard conforming lender after a period of time.
Correct.
But you've got in the door.
Yeah,
okay,
that's
excellent. Right. All right. So what sort of documentation should self-employed people, like in preparation for getting the non-conforming, like a low doc loan, but just a commercial loan in general? What sort of documentation can they start looking to prepare?
Yeah, so a lot of the time, BAS is king.
Having your BAS lodged.
Having your BAS lodged, having it up to date. That's a really big thing. A lot of specialist lenders don't ask to see tax portals either.
Okay.
So they don't need to worry about that. Be preferable if it's up to date because you need to sign a declaration when you apply for the loan so that your tax is up to date. But if it's up to date, fantastic. But again, if it's not, there are options to be able to help people out.
Go into that segue.
Yeah,
exactly.
No,
that's fine. So we see more and more often clients with tax debt. Our first port of call is not a major bank for those circumstances for obvious reasons. They generally don't like it. I know when I was with a major bank, it was sort of frowned upon having tax debt. It's more prevalent these days with things going on in the economy locally and globally. So tax debt is a real thing. Number of people have approached us with tax debt. We've got solutions like specialist lenders. So don't be afraid if you've got tax debt, the tax arrangement, outstanding BAS, that sort of thing. But the things, like you said, preparing for a loan application, you get your ducks in a row, get your financials done. The bank wants up-to-date financial information, basically, to know what they're lending to.
That's right.
Yeah,
that's right.
Excellent. Okay. All right. So I'll hopefully tonight shed some light on self-employed lending. It's not that hard. If you've got any questions, I can always answer them offline. And thanks for coming in, mate.
No worries.
Appreciate it.
Yeah, happy to be here.
Thanks, mate.
Cheers.
Thanks, Ed.
Thanks, mate. Appreciate it.
Thanks, everyone.
Thanks, guys.
Have a good day.
See ya.